We're joined by Matshekga, who's chief economist at Nedbank, and independent economic consultant Elize Kruger. A very good afternoon to you both. Thank you so much for your time. Perhaps let me start with you, Elize. We know that the strongest rand, the South African rand, hits its strongest level against the dollar. The rand struck 16 per dollar for the first time since June of 2022, and it's a much-needed boost. Some optimism about the country's economic outlook. How much of a win is this advance?
Good afternoon, Mpo. Yes, indeed, this is quite significant in my view, and I think it's definitely got a widespread impact on the South African economy. Quite positive from the point of view of imported costs. So if you think about the inflation picture, the fact that we've got the rand so strong will have a notable positive impact on import pricing. It also filters through into the economy, via our trade balance. That will be more positive. That's also feeding through to the rand exchange rate to be a positive factor. In terms of trade is beneficial. So a number of factors, a number of positive spin-offs from a stronger rand exchange rate. So from that point of view, I actually do expect the bank to cut tomorrow. I'm in the camp expecting that, or thinking that there are so many positives right now that the bank does have an opportunity to cut rates.
Isaac, let's stay on the positives, the positive spins. We know that South Africa's economy struggled with slow growth and rising debt for more than a decade, up until last year, with investor appetite suddenly improving. In your view, what does this mean for South Africa's economic position, given some of those recent developments, the stabilization of electricity supply, the removal from the Financial Action Task Force's grey list and others?
Sure, definitely, and we expect further gains. On Friday, we'll get an update from the National Treasury regarding the Operation Vulindlela measures. Those are meant to unlock the logistical constraints in the economy. We've already seen the benefits, more stable electricity supply, rail system improving, and once we can really improve this environment and get fixed investment going, definitely the growth potential of the economy and the capacity to create jobs will improve and boost overall growth further.
Elize, this is something that you touched on just now. We know that investors will be shifting focus. So the country's first interest rate announcements of the year come tomorrow, which could be a close call. Some think that the bank will take a more cautious approach given the stronger growth data that reduces the urgency of cutting rates. But it's twofold. Others say the rand's sharp spike could create some room for further easing. What's your expectation?
Yes, I think it's a close call, and so it's really a 50-50 among the economists for this one. I do think the extent of the rand strength that we've seen since the November MPC meeting will have an important impact on the decision. So at the time of the November meeting, the rand was still trading at about 17 rand 25 to the dollar. And, we all know we're now below 16 rand. So that's a notable appreciation since the previous meeting. That will filter into the Reserve Bank's own inflation forecast, for 2026 and beyond. And I do think that we will see a downward revision to the SABC's own CPI forecast as well. And, looking ahead, we are looking at petrol price declines that we've had now in January. We're expecting another fairly substantial one in Feb. So if you look at the forecast curve, in my view, as headline CPI will be very close to 3% as soon as February this year. And, the SABC has always been saying that they're forward-looking in terms of their views on interest rates, because, interest rates will impact the economy looking forward. So I do think from that point of view that there is indeed scope. And it would be great to have, another positive in this current, cycle, because it really boosts, consumer confidence, and it sets the scene for the economy to grow substantially during the course of 2026.
Isaac, Elize talks about betting on a downward revision, with the rand being in a hot streak. What are your expectations for tomorrow?
Sure. I mean, the environment is quite favorable right now for another interest rate cut, but I doubt if the Reserve Bank is going to move very fast. It's all about whether the rand is going to settle where it is right now, or we're going to see a bit of a reversal of some of these very strong gains. Remember that it's all at the moment about a weak US dollar, which is being talked down even by President Donald Trump. We're seeing it boosting gold, and the rand is just in this sweet spot. But how long will it last? And the Reserve Bank will be watching that quite closely. The Reserve Bank, as we do in the country, prefers a stable currency, so forecasting can be a little easier. So, I believe that the Reserve Bank will be a little cautious and maybe wait until it has settled a bit. So we're likely to get a very dovish statement, i.e. very positive on inflation statement tomorrow. But that statement will say, there's still risk that some of these very strong gains could be reversed. So it's better to wait until the currency has settled.
Absolutely. Elize, we came out of the World Economic Forum in Davos, and that took place during one of the most complex geopolitical periods in history. But here at home, as economic reforms start to bear some fruit and the fiscal trajectory even brightening, South Africa's delegation took to the meeting the country's growth strategy, Eskom stability, and so forth. And that was all part of its charm offensive. How soon do you imagine that we'll start to measure the impact of Team South Africa in Davos here at home?
Well, I think our structural reform measures are ongoing, and we will start to see the positive impact of that even in 2026, and in the medium term more specifically. So from that point of view, I think they have obviously tried to sell the country's economic prospects by alluding to the progress that we have already done or made. So I think we'll see that in the medium term. If you look at the trajectory of South Africa's economic growth prospects, we are now moving into a phase where we move from, I would say, sub 1% average growth to closer to 2% in the medium term. And from there onwards, if we build the capacity of the economy in this time period, we could look forward to higher levels of growth in future. So I think it's an ongoing process on our side. When it has started with electricity generation a couple of years ago, we are seeing the fruits of that with no load shedding and building our capacity for future growth. So I think the fact that we've been in Davos, the South African delegation, it's a positive, but it's not so much an ignite. It's not igniting us suddenly. Yeah. We have been in the process, and we should start to see the fruits thereof even in 2026 and onwards.
Isaac, while we're still on that and the impacts that we could potentially see from Davos, we know, as Elize says, it's an ongoing process. Of course, South Africa's medium-term growth strategy has many legs, like accelerating structural reforms, building state capacity. What are your thoughts around the impact?
Sure, we expect a further boost, at least on the investment front, from this positive environment. Remember that next month on the 25th, we're getting the budget statement. The revenue numbers are looking quite good. The Minister of Finance has sort of stressed the National Treasury's commitment to keeping, number one, expenditure growth under control, and also improving the growth outcomes from spending by government. Last year, we saw a significant expansion of the public sector infrastructure budget, and we expect the rollout of those funds to really boost the overall economy, and that definitely will add to this positive momentum, which should lift foreign investment further. Even the investment by domestic corporations should start picking up.
And Isaac, in fact, just adding on to that, just a moment ago, you spoke about some caution around the reversal on some of the strong gains. We saw President Cyril Ramaphosa in his newsletter this week, speaking on the back of Davos, warning that while the signs of the country's economic progress are encouraging, there is no time to rest, adding that the progress is still fragile unless translated into sustained investment and structural transformation.
Sure. Remember that, we are behind the curve, so to speak, when it comes to growth. We saw a slump in, for instance, public sector infrastructure investment over the past decade or so. And as a result of that, we had to deal with the very severe effect of, load shedding, poor rail system. Now we're faced with a very poor water infrastructure system. So we really need to speed up the revival of this infrastructure, not only revival, of course, but also the expansion, and also ensure that, we benefit more out of every cent and rent spent on the local infrastructure. Because, what has really held this economy back over the past decade or so, and I could say since about 2012, 2013, has been deteriorating infrastructure. So that's quite important, and we cannot waste more time as a country.
Very well. Thank you so much. Let me thank you both. Isaac Matshekga, Chief Economist at Nedbank, and Independent Economic Consultant Elize Kruger there. As we look to tomorrow, investors shifting focus to the country's first interest rate announcement.